Now we're going to go through an example of a company for William Irago. So back to our upload page, we can click upload and say it's an existing contact this time because we've previously done the individual tax return for William. It is important that you do the individual tax return first because we want to be able to link up any salary income in the report as well. So we select William Irago, once again browse files, and in this particular case we're uploading this document here. You select the financial year, and in this case it's 2024 again, and you say company tax return, once again saying to us that it's not the latest financial year, although we know that 2024 is still valid virtually every lender, so we can just say yes there and click analyze. Once again, you can leave this page, it will continue to analyze and it will send you an email once it's complete. Once it's finished uploading and reading and going through its process, you can then start answering some of the questions. So in this particular case, it's picked up the address, but it just wants you to double check and make sure that that was done correctly. Once again, same as the sole trader example, we have purposefully chosen a tax return that does have a lot of information in there, so that can trigger a lot of the questions, so we can give you a good example. And for those that are in our first 100, this is one of the examples of fixes that we're working on in terms of positive and negative figures. It does pick up the figure, but it can't quite recognize if it's a negative or positive, and that's just because of the variance in the tax return. So it's just going to ask you if it's a positive or negative figure. Now keep in mind, this is a bit of a double negative situation. So is a cost of sale a negative figure? Well, if it's in the expenses, it's a positive figure, but it's a positive within the expenses. So hope I haven't lost you there, but we would say yes, this is a positive figure. The main ABN, once again, there's a link, it takes you straight there, and it's the Australian Tax Office again, so we can just fill in that there. If there is any instant asset write-off, for those who didn't see the sole trader example, this is where you would navigate to the depreciation schedule, and if there isn't one, it's important that you ask the accountant to provide you with one. Then if there is any instant asset write-off, you could put it in here. So if you're not sure, there's a few different ways it gets identified on the depreciation report, and once again, this is one of the features that we're working on to identify instant asset write-off. But sometimes it will say 100% written off, sometimes it will have an I in the type, which is short for instant asset write-off, or IAWO or IW. But the best way to find out is you can see that there was an opening value of a certain amount and a closing value of the same amount. That means that the entire amount's been written off. So let's just say in this example, it was 5,000. The reason we're not picking up the debt balance from the balance sheet is that this particular tax return, for example, was done in 2024. Now, obviously, any debt information is going to be a year old, so that would just be something you'd have to collect on either the credit report, or you would have to ask the customer to provide statements if required. So we're also looking to see if we're double counting income, and this is where a lot of brokers can be caught up, is when there's, say, a distribution from a trust. Now, we're not handling trust tax returns yet. Once again, one of the features on the horizon, but it's careful here because it is flagging here. So we'll say in this we'll be able to provide financials and tax returns, and if it's a trustee or a beneficiary only, in almost all cases it will just be a beneficiary. A lot of the time trustees don't trade, so we'll continue there. In terms of interest income, in a lot of cases this can't be included. But sometimes if there's, and a lot of lenders will just ask you to exclude it. So we can say, was it Div 7A? For those that don't know, that's when your company lends you money and you need to repay that and pay interest on that. So if we said Div 7A only, just as an example, and then do you expect the dividend income to continue? So this is the question for some particular tax returns, maybe where the company is receiving dividends. And do you have ownership in the company that's received the dividends? And then there's a loan to a shareholder. Now, obviously, this is to do with the interest income. So we can say, well, yes, the Div 7A loan does still exist. And then were there, you can see there's interest expenses in 2024. but it appears it has been closed, and that's just coming from the balance sheet within the tax return itself. And you can say, does it still have no company debts? Yes, still no debts. And we can continue on from there and finalize the questionnaire. Once you've completed the questionnaire for the company, you can now continue on to report. So we'll go into the contact, William Arago. Then we go to entities to find the entity, and obviously we want this company. So we click into there, and then we want to go into create the report. Now, this is where it'll ask you the ownership percentage. Once again, a future feature we do want to plug into ASIC. There is a cost in extracting that information though, so something to keep in mind. But here we can put the ownership percentage. So if, say, for example, William owns 65% of this company, and then you select the year that you want to do, you've only selected 1 year, yes, that's okay, and then you go complete report. This one's obviously got a lot more interesting information here. So this is where, once again, we can sort of determine what we want to use. William's got a very successful fake company. I'm not sure exactly what he does, but that's pretty impressive profit. So what we're going to do, just for the purpose of trying to make this work where we need the additional income in here, we'll go across to here. Obviously, he's got this other entity here as a sole trader. Let's just remove that one and just say that he's only got this company for this example. So there's obvious things, company profit. We can include that. And in fact, all of the things that are where quickly has the input field there already, we can just select those to include. So let's just copy exactly as it is there. Okay, so now we've data entered all of the information. Now, purposefully, to get this one to fail, I've selected a loan of $4 million for those brokers lucky enough to be getting loans of this size, but William's got quite an impressive profit in his business. So now also we are only using the 1 year, so I've just data entered that 1 year of tax returns for the purpose of the example, and we've put all of the things that are in there as well. Now with the non-recurring income, so where this information is coming from is everything that's under here. Now, a lot of these are under this section because banks can either vary of how they look at it, or it's not available in policy, or both. And it's important that you need to check those things if you need it to work. So in this particular example, let's say that William needs $4 million to get his dream property, and then we start looking at, well, what can we actually add back here? So Div 7A interest is not going to make a lot of difference, but it is important that you address this. And once again, the notes to broker and questions to lender and things like that are going to be triggered for Div 7A interest. So if we click yes to Div 7A interest, we look at trust distributions. Once again, it's very policy related, but if we click yes, we go fringe benefits, employee contributions, we select yes. And dividends is purposefully not included. And you can see that there's an explanation as to why. And then there's also unrealized gains, revaluation of assets, things like capital gains and one-off income and expenses that generally don't get included. So if we then wanted to go back and change the figure in non-recurring income to 6366, as you can see, the borrowing capacity has gone up a touch. So in this particular case, obviously being such a significant amount of net profit, 15,000 is not going to make a huge difference to the overall borrowing capacity. But what it does do is it gives you a little bit more to borrow as well. And this is where you sort of weigh up then how to go with research. So to find out if a lender will do any of these particular things, you can go to the questions to lender section, and you can literally just copy and paste this into an email. Once again, even if you don't select certain things like Div 7A interest, then it's important still to include, because the lender themselves might actually factor in the debt for the owner of that company, in this case William, to pay back the loan to the company and not include the interest. Or even if they do include the interest, you can see it's quite a small amount, so it's not really going to make a difference, whereas the repayment might be significant. And so it's important that you factor that in as well. But by asking the lender, you can understand then what their policy is on that sort of thing as well. Once you've gotten your answers back and you've chosen the lender, let's say, for example, we can make it work, and William said, yeah, I can find the extra money to be able to borrow and look at another lender. Okay, we've got a DTI fail here, but obviously you've got to check other policy nuances as well. But then we can go across to the toggling section as well, select which income we're including or adding back, and then that will help us to generate the notes to the lender. So this is what you would submit with your application, and then there's notes to you as well. And this is really important. This is going to help to shape your research and discussions with your customer, as well as things just to be careful of when you're looking to submit an application.